Have you wondered why real crypto traders use stablecoins? We're going to explore that today. Let's clear up the basics. USD, or the US dollar, is real world fiat cash, the kind you deposit into your bank account or receive from a paycheck. It's what most people are familiar with when starting in crypto. You might use USD to fund your Kraken account or buy your first few coins. But there are several coins you can't even trade when using US dollars. USDT is a stable coin called Tether. It's the most widely paired coin across global exchanges and works especially well for automated trading bots like the ones we use on 3 commas. And we've grown out of using USD, we've leaned more into Tether. USDC is another stablecoin, backed with US regulatory oversight and stronger transparency. Many traders trust USDC when working with US based exchanges. It's often the go to for those who care about compliance and verified reserves. Both USDT and USDC are pegged 1-to-1 to the US dollar. That means there's a reserve backing each coin, usually a mix of actual dollars, treasury bonds, and liquid assets, all held by the issuer and often verified by outside audits. Next, let's show you how trading with US dollars actually feels in real life. Trying to trade crypto with US dollars is like driving a Formula One car up to a toll booth that's still closed. You are built for speed, but your funds are waiting behind a gate. Ever wonder why your trades feel like they're stuck in traffic? Let's break that down. USD delays happen because it's chained to the banking system. ACH transfers take days. Wire transfers cut off in the afternoon. Even when your money says pending, it's often not truly available. And nights, weekends, or holidays? Forget about it. But what happens when you use stable coins instead? Let's talk freedom. Stablecoins let you trade 24/7. Why? Because they're digital and fully on chain. They are not tied to banks, offices, or closing hours. They are always awake, always moving, ready when you are. There is no processing time, no 3 business days, just fast, permissionless momentum. And if you're using bots, the next part matters even more. If your trading bot is funded in US dollars, it might be ready to buy, but your funds might not be. Even seconds of delay can change the price. Picture this: your bot catches a dip at 2 a.m., but your US dollars are still being processed. By the time your trade executes, the price has shifted and you're already behind. Stablecoins don't wait. The bot buys instantly. It adjusts your average and keeps you ahead of the market. But it's not just about buying. We also need to sell these coins. You expect your USD to show up instantly after a sale, but that's not how it works. It's often held up in post processing, waiting for banking windows, or getting batched by the exchange. That means your bot can't use that money for the next trade and you lose momentum. Selling into USDT or USDC, your balance updates immediately. You're ready to jump back in with no lag or no lockups. So, how do we manage this in real time with actual USD? Let's show you what works well. Kind of. We use Kraken to fund our bots directly with US dollars, and that helps a little. Once the money's in Kraken, it's already in your exchange account. You can link it to 3 commas and trade without waiting on external transfers. But it's still not instant like stablecoins. There are trading fees on Kraken, around 0.16% to 0.26%. And while the setup is cleaner, you're still dealing with fiat speed limits. So, what happens when your account and your gains start getting bigger? We've been making money on our 3 commas bots, and that's created a new problem: scale. Using US dollars for one bot with thousands of dollars tied up, that's when the delays hurt. It worked while we were depositing slowly, but now we're planning for growth. And that means preparing for a whole new level of speed. Learning how to manage that future wealth starts now. Stablecoins remove the friction and let your capital actually work. Let's zoom out and pull it all together. If you're serious about crypto, stablecoins aren't optional. They are the bridge between your strategy and your execution. Don't just take our word for it. Let's end on a thought that sums it up. Embracing crypto means embracing stablecoins. If this helped, we've got more videos just like it. Check out our videos on bots, wallets, and smarter trading. Hit subscribe if you're into that kind of thing. We're here to help you trade with confidence, learn from our mistakes, and maybe have a little fun along the way.